Hey, what's up YouTube? I'm Joji Davenport, and in this video, I'm going to explain 9 reasons why I think you should invest in the stock market. My purpose for creating this video is to get people who are not investing or those who are on the fence to take action and start investing in the stock market. I honestly believe that there is no better time than today to get started, and I truly believe that if you start investing today, you're going to set yourself up for financial independence and begin to build generational wealth. So with that said, let's get right into it. The first reason why I think investing in the stock market is a good idea is that we are living in a technological revolution, and I only see growth for the future. When you invest in the stock market, you are betting that companies today will make the world better in the future. The goal of a company is to solve a problem for a consumer. And this is why, as time has gone on, the way we live has evolved. Like 100 years ago, transportation was drastically different than it is today. 30 years ago, the average person did not even have a cell phone. And 15 years ago, we didn't even have YouTube. So, given the rate at which the world has changed, even in my lifetime, I truly believe that the innovation happening today will lead to a better future. And if this is true, then companies will only continue to grow and prosper in the long run. If you invest in these companies through a total stock market index fund or an S&P 500 index fund, you would see the gains associated with that growth. In other words, I think there's so much innovation coming our way, and you have the opportunity to ride along on that journey as a partial owner of those companies. The second reason I'd recommend you start investing is so that you can outpace inflation. A dollar today is worth significantly less than it was in the past. And contrary to what most people think, the relative value of goods hasn't really increased over time. Instead, the value of a dollar is worth less over time, so you need more dollars to buy the same goods and services. And that's called inflation. This is why it's crucial that you invest your money into an asset that can outpace inflation. Because if you don't, then the purchasing power of your money erodes over time. $10,000 that sits under your mattress for 10 years will not be able to buy the same goods in 10 years as it could today. And that's because the value of a dollar decreases over time. Now, the way we combat this is by investing in an asset like the stock market, which can beat inflation. The inflation rate in 2021 was 4.7%, but the US total stock market returned 25.7%. So if you did not invest your savings, you lost 4.7% in purchasing power. If you invested in a total stock market index fund, your purchasing power increased by the difference, which would be 21%. Now, inflation was higher than average last year, as was the return of the S&P 500. On average, inflation sits at around 3%, and the S&P 500 returns 10% a year, which will leave you with an average of a 7% inflation-adjusted return per year. The point here is that inflation will erode your purchasing power. It's a hidden tax that we all pay, so you should think about investing in an asset like the stock market, so that at the minimum, your hard-earned savings keep up with inflation and don't become worth less over time. The third reason why you should start investing in the stock market is that investing in stocks has never been easier. Before the internet, people had to get on the telephone and call their stockbrokers to place orders to buy or sell stocks. But today, you can just sign up for a brokerage account online and buy and sell stocks through their online platform or on your app on your phone. And there are so many brokerages that you could choose from: Robinhood, Vanguard, Fidelity, Betterment, Charles Schwab, and the list just goes on and on. The few crucial pieces of information that you do need to get started are just your social security number and your bank account information. And that's really about it. If you have internet access and a few dollars to your name, you could get started investing this week if you really wanted to. You could set up automatic investing so that a certain amount of your income is automatically allocated for investing. It's really never been easier. If you've ever made an online account and set up automatic payment to pay a bill, like your gas and electric, you could totally invest in the stock market. And even if you haven't ever paid an online bill, it really isn't that hard to get started. Nor do you need mountains of money to begin. You could just dip your toes in and start investing $5 a week with any brokerage of your choosing, and just work your way up as you begin to feel more comfortable. And as a side note, if you'd like to know what brokerage I use as well as what I invest my money into, let me know down below in the comment section. The fourth reason you should invest in the stock market is that it is the easiest form of passive income that you could generate. Investing in a total stock market or S&P 500 index fund is as simple as spending an hour to set up an account online, entering your bank account information, and setting up automatic investment. Now, you occasionally have to rebalance your portfolio, but that's really it. In exchange for a few hours of work, You get to be a partial owner of every publicly traded company, reap the rewards of all their growth and success, all whilst doing nothing. In my opinion, it's the most passive side hustle that you could have. Over the last 41 years, the total stock market has grown with a positive return in 34 of them and only given a negative return in 7 of those years. Now, if you put all of those years together, the average return was 10% compounded annually. And if the future is anything like history, you'd be making a positive return on your money in most years and definitely make a positive return long term. And like I said before, I honestly believe that the innovation to come will lead to economic prosperity and growth. Number 5, for those of you with a 401k match, investing is an easy way to increase your income, because if you don't participate in your 401k plan, you're leaving free money on the table. A 401k is a retirement plan offered to people who work in the private sector, and chances are most of you have a 401k. And it's very common for companies to incentivize their employees to invest in the 401k by offering a company match equal to a percentage of your income, which is usually between 4 to 6%. Most will contribute 50 cents for every dollar up until that percentage. So by choosing to invest in the stock market, you are increasing your income with no additional work. It's free money, so go out and take it. The 6th reason why I invest in the stock market is that it pays dividends. You've probably heard the phrase, X pays dividends, and that term comes from the stock market. A dividend is a profit that a company decides to disperse to its company owners. And since you are a company owner, when you invest in stocks, you receive this dividend. Dividends or profits are paid on a scheduled timeline, which could be monthly, quarterly, or annually. Each company pays a different percentage dividend per share. For example, Coca-Cola pays a 2.8% dividend per share per year on a quarterly basis. Now, not all companies distribute dividends. Some actually decide to retain their profits and just reinvest them back into the company. And if you decide not to invest in individual stocks and instead invest in a total stock market index fund or S&P 500 index fund, which is what I actually recommend, you'd also earn dividends since some of the companies in those index funds distribute dividends to their shareholders. VTSAX, for example, has paid an average of 1.6% per share on average over the past 5 years. So another reason why you should invest in the stock market is that it literally pays dividends. It's passive income that you can decide to withdraw or reinvest into more stocks. And the idea here is that in the stock market, your money is working for you. Number 7, our system cannot support a retirement based on savings alone. According to Investopedia, many experts maintain that retirement income should be about 80% of a couple's final pre-retirement annual earnings. And in order to do this, Fidelity Investments recommends that you should save 10 times your annual income by age 67. The point is, that is a lot of money to save. And according to Forbes, 70% of Americans live paycheck to paycheck. So clearly, the average person will not be able to save 10 times your annual income by 67. But even if they did, just saving 10 times your annual income and not investing it would not give you enough to live on in retirement. In other words, you not only have to save 10 times your annual income, but you actually need to start investing it so that compound interest can turn it into a nest egg that can support your retirement. So simply put, saving alone will not be able to support your retirement. You need some way to grow what you've saved, and the stock market is a powerful tool that most people use to do that for the exact reason that you can accomplish that goal with little to no extra work by the saver. The 8th reason, it gives us the opportunity to control our tax rate. It's no surprise that we all pay taxes, but something that I do hear a lot from people, including my own colleagues, is them complaining about how much tax that they have to pay. And what they don't realize is that they actually control their own tax rate. You control your tax rate. You can lower your taxable income by investing in tax incentivized retirement accounts like the 401k if you're a private sector employee, or the 457B and 403B if you're a public sector employee. For example, let's just look at my teacher salary, and I'll just ignore my side hustle income just to simplify the example. I make $85,000 a year as a high school teacher, but I currently only pay taxes on $32,000 of the income because I max out my 457B and 403B with $20,500 in each, as well as claim the standard deduction of $12,000. So in comparison, if I were not to invest in those tax incentivized retirement accounts, I'd be paying much more in taxes. In the first case, I'd have a 7% average tax rate. In the second scenario, I'd have a 12% average tax rate. And yes, I will eventually pay taxes on that earned income, but I can strategize ways to optimize my tax rate just like you can. And as a side note, if you like a video on my tax optimization strategy for financial independence, let me know down below in the comment section. The 9th and final reason why I think you should invest in the stock market is that stocks can help you build financial independence at an earlier age in life. Investing a large percentage of your income into stocks will allow you to retire at an earlier age. I think a lot of the time people want a lot of money so that they can buy materialistic things like a new car, a new phone, the best house. But I honestly think the most important thing money can buy is your time and the freedom to choose how you spend your time. At the end of the day, today will be gone forever and you will never get it back. And if today was your last day on earth, would you be happy with how you spent your time today? The answer for most people would probably be no, because they spent 8 hours of it working at a job instead of spending it with the loved ones or doing things that they love. But it doesn't have to be that way. Choose to live differently. If you live below your means, save and invest a large percentage of your income into the stock market, you can achieve financial independence earlier in life and give yourself and your family the freedom and opportunity to spend your life on what gives you value and brings you happiness. So ladies and gentlemen, that's all I have for you today. Thanks for watching this video. If you found any value in watching this video, hit that like button, consider subscribing, and I'll see you next Monday.